recently there's been almost an arms race in this space, and we have new decentralized exchanges coming up. And Yellow actually is into that space in the sense that it's a different way of doing cryptocurrency trading using a bit of a layer three technology, which is actually means that people can do almost high frequency trading on crypto assets, which is not really possible at the moment.
Hello, you're watching Proactive. I'm joined by Coinsilium CEO Eddy Travia, as well as CFO Ben Proffitt. Eddy, Ben, very good to speak with you this morning. I'll start with you, Ben. Could you share your views on the interim results and the key takeaways investors should have from the first 6 months?
Sure. Well, I think the key points of interest really are in the balance sheet movements. As you guys are aware, we launched our Forza Bitcoin function in the spring, and that's facilitated us raising around £17 million over the course of the summer, with about half of that falling within the scope of these accounts to June and about half falling afterwards. Now, on the back of that, we've obviously also gone out and bought a bunch of Bitcoin, with around, I'd say, 40% of the Bitcoin that we've announced we've purchased falling within the scope of these accounts. So what that's meant is a movement in our Bitcoin value on our balance sheet from around £500,000 in the comparative to £6 million in these accounts. And similarly, our cash position has moved from 400,000 to 3.5 million. So really, the balance sheet here is telling us a story of us bolstering our reserves of long-term value that we can then use to support the business over the foreseeable future. There isn't really a huge amount to talk about in the P&L, corporate burn commensurate with the previous period. So, that's all good there. The bottom line isn't hugely comparable between this period and the prior periods due to there being some fair value adjustments in the prior years relating to investments and our pre-Forza Bitcoin holding. So really the story here is around the balance sheet.
Eddy, as Ben was saying, you've been building that Bitcoin treasury. You've built 182 Bitcoin since launching Forza back in March. How central is this to Coinsilium's long-term value strategy?
Yes. So as Ben was saying, the value of our assets obviously has increased. I mean, at the end of the interim results, so end of June this year, we had the three times more assets in value than the same period last year. And a lot of that comes from what we have been raising, and obviously the amount of Bitcoin that we have purchased since we launched Forza. So we now have in the Forza Bitcoin Treasury 182 Bitcoin. We can see this as a kind of the foundation of our asset base, but we are not only a Bitcoin treasury company. Coinsilium has been investing in and doing venture building in blockchain companies since its launch in 2015 on the AQSE exchange. And so therefore we have a portfolio of investments. But as Ben will explain more in details, most of the time the valuation of this portfolio is around the cost because many of these investments haven't been realized yet in terms of, for example, tokens being launched or liquidity events occurring. So therefore, it's the great thing about Bitcoin and in our Bitcoin treasury is that we can easily value this and the market can value it almost instantly every day because everybody knows, can find publicly the value of Bitcoin, which is obviously not the case of our portfolio. But in the future, we will be able to demonstrate that we have a core activity, which is our core activity being an investor, and we have a portfolio of investments as we have been highlighting a few of those in the interims that we published recently. And therefore, I think in the long term, we will have both the strength, the solidity of the Bitcoin treasury, hopefully appreciating in value. And at the same time, we're going to build shareholders' value with the Coinsilium portfolio of ventures in which we have invested over the last few years.
Ben, the Yellow network is preparing for a Yellow token launch later this year. What does this mean for Coinsilium's portfolio value?
Well, as Eddy was saying, a lot of these investments we have to hold at cost, and that's due to the nature of the investment essentially being a sort of advanced subscription to tokens in the future when they're launched, as opposed to, an equity investment in a company, which, is a different undertaking. So we've always had to hold these investments at cost, and with Yellow in particular, we hold it around £150,000. However, once the token has launched, then that investment, that sort of prepayment, if you want to think of it, becomes an allocation of actual tokens. Now, these tokens will obviously have a market value, so they'll be readily traded, and that will allow us to start fair valuing or mark to marketing the investment at each of our reporting dates. We will have a lock-in period in terms of the tradability, but the value, the value ascribed to them in the accounting can start to be recognized immediately. So it will potentially have, quite a substantial impact on our overall portfolio, and we certainly hope it will, but it may take some time for all of the value to fully accrete out of the project.
I mean, Eddie, with crypto adoption rising and regulation evolving, where do you see the biggest opportunities for Coinsilium in 2026 and beyond?
So for those who are following closely the crypto markets and the whole ecosystem, we know that for example, cryptocurrency trading has been one of the most active and probably one of the most profitable activities in the space. And interestingly, even if we are a few years now with a lot of decentralized exchanges and centralized exchanges already doing quite very serious volume and high liquidity. Recently, there's been almost an arms race in this space, and we have new decentralized exchanges coming up. And Yellow actually is into that space in the sense that it's a different way of doing cryptocurrency trading using a bit of a layer 3 technology, which is actually means that people can do almost high frequency trading on crypto assets, which is not really possible at the moment. And there seems to be a very high interest from the crypto community at large, looking into these new ways of trading. So I think in terms of evolution, we have more and more traders, we have more and more activity in this space, and therefore we believe Yellow can get a share of this market, a substantial share of this market, given the experience of the team, of the founders, and given the technology they're using, which is very innovative. But also, as you were asking, there's also regulation evolving, meaning mainly led by the US, but closely followed by large markets around the world. These markets are trying to simplify regulation so that actually people can, both retail, both institutions, can invest and at the same time can innovate in this space. I mean, until now, let's say recently, it has been quite difficult. But at the moment, since the new government in the US, there's been a quite proactive and pro-crypto stance in the United States. And usually, regulatory-wise, this tends to kind of lead around the world, and many financial markets usually follow what's happening there. So we feel that in terms of regulation, it's going to open more doors to more entrepreneurs, to more funding. And this, in turn, will also improve crypto adoption overall. Because if, for example, if stable coins are regulated in a way that doesn't stop innovation, but actually promotes it and helps these companies evolve, then we can expect the stablecoin market to increase, which is already a very substantial market. Stablecoins being this digital USD or digital euro, so basically what we call fiat currency, but in a digital format, as a digital asset. And this is very, very convenient for cross-border payments or for settling large financial transactions, and of course for trading.
Eddie, would you remind us then what the big trends are you see for 2026?
So we see a trend of more open regulations, more interest for different verticals, and one of the prime verticals being trading. And we see overall probably what we call tokenization of securities, meaning that even private and public companies can start looking at tokenizing their shares, and at the same time very like funds can start looking at tokenizing what we call real world assets, usually using the acronym RWA. And this is again using blockchain technology for making markets more liquid. So if you imagine bonds, if you imagine real estate being transformed into a digital asset and easier to trade around the world. The crypto trading trend, the fact that this is becoming more and more automated. So AI taking part of this innovation in crypto trading. That's one trend. The other trend, which is facilitated by the openness and the regulatory changes that are coming, is the use of stable coins. So stable coins for investing, stable coins for cross-border payments, stable coin even for savings. Maybe large institutions are looking at stable coins for very large transactions and at the same time for holding large amounts of US dollar or euros and so forth. And the third trend that we see is what we call real world asset tokenization. So these real world assets could be securities. So tokenizing securities so that they are easily tradable on blockchain through different exchanges. Or, for example, tokenize real estate or shares of certain values. For example, share of a real estate fund, and tokenizing all sorts of real-world assets. And this is another trend. And I believe these are the major three trends for 2026.
Well, gents, I hope you'll keep us posted with all your progress. Thank you very much for taking the time to speak with us today.
Thank you very much.
Pleasure.
That's Coinsilium CEO Eddy Travia and CFO Ben Proffitt.